the simplest way to find bargains is to be a cloner. And I am what you would call a shameless cloner. And then in the US, we have 13F filings where every quarter people have to file what they own. So just figure out who the smart people are, look at what they're buying, reverse engineer them. You don't need an analyst. It's actually fun.
So this was Mohnish Pabrai who told us how to find bargains in the stock market by cloning the likes of Warren Buffett, Bill Gates, Charlie Munger, Ray Dalio and other super investors. In this video we will look at the top 5 stocks super investors have bought in 2022. Also how you yourself can find out what they buy thanks to the 13F filings. It is also important to mention that you should always do your own research, as each investor has a different circle of competence and you should only invest in things within your circle of competence. That being said, let's look at number 5 on the list, which is Visa. Now, if you have ever paid with a card, then you have probably helped Visa grow their revenues, which has grown 10% annually over the last 10 years, while earnings have grown 13% annually. Even during the financial crisis of 2008, Visa grew its sales. Now with higher prices due to inflation, it means that Visa will get a bigger cut from each transaction. That explains why these investors have invested in Visa with uncertain times ahead of us, because it has a proven track record even during recessions. It was only 2020 that Visa had a negative growth year over year, because international transaction fees were lowered due to COVID. All in all, that is it for Visa, and coming in at number 4 we have Amazon. Now, I have posted a one-page analysis of Amazon on Instagram at @SubmitInvest if you want to check that out. Link is in the description. But in short, the conclusion is that the conglomerate still has room to grow with services like AWS and ads leading the way, which is the fastest growing segments, but they still make up a smaller percentage of the company's revenue. E-commerce is still the company's main source of income. Therefore, only if you have a very long-term perspective, like for example Warren Buffett, should you consider buying into this stock. So, why this is the 4th most bought stock in 2022, you might ask? Well, the stock has lower multiples than its average even before the crash in 2022. For example, the 5-year average PE is 139, while it is 55 at the time of this video. So for investors to see a stock that has been trading at ridiculously high multiples for so long and now being undervalued based on multiples makes the stock attractive. The company has also grown its revenue by 23.97% annually for the last 10 years and earnings by 43.96%. Yes, you heard that right. But the question is if Amazon can continue this growth. Let us know what you think in the comments below. So, moving on to number 3, we have Alphabet, aka Google. We have all used Google to Google something, and as a matter of fact, you are watching this video on one of Google's platforms, YouTube. Therefore, we can definitely say that Google has made money from us by simply watching YouTube videos or clicking on an ad multiple times during our lifetime, maybe even every day. And this is exactly what the numbers tell us. 80% of Google or Alphabet's revenue comes from ads, and will keep generating billions in revenue for Google in the future, precisely because of its monopolistic position. However, just like Amazon, Google's cloud service is the fastest growing service that they provide and is giving Amazon a run for their money. Alphabet also has music and video streaming services, apps, hardware, etc., which together with cloud makes up the other 20% of its revenue. And while on the topic of revenue, it has grown 21% annually for the last 10 years, and earnings have grown by 21.28%. With amazing growth numbers like this, huge cash reserves to spend, and positive macro trends in both digital ads and cloud computing, tells us why 10 super investors have bought this stock in 2022. Now, number 2 on the list is Microsoft. Yes, with 12 buys from super investors, Microsoft sits at number 2. Now, if you look at Microsoft's stock price for the last 10 years, it kind of struggled for some years and then just goes through the roof. This has to do with Microsoft's current CEO, who got appointed in 2014 and set the company on the right track. There was some speculation about whether Microsoft was now too big to grow, but with Satya Nadella, it has grown its revenues by 16.02% annually for the last 5 years, and earnings by 28.67%. Just look at the averages for the last 10 years and you will see a huge difference. And a lot of it is thanks to cloud computing, which has grown so much over the last few years and is also expected to grow in the future. Now, unlike those two companies mentioned before, Microsoft has a really diversified portfolio of services that make up their revenue, with products and services like Office, LinkedIn, Xbox, Azure, etc., and not one making up more than 32% of its revenue makes it a lot less risky. Also, if you have followed the news recently, Microsoft is waiting for the $68.7 billion deal to be approved of acquiring Activision Blizzard, making Microsoft the third biggest gaming company in the world. What this means is that most likely some Activision games will be Xbox exclusives. Having bought PS5 recently, we are jealous. Even Warren Buffett bought ATVI stocks in hope that the deal goes through, which it most likely will. With the biggest deal in gaming industry, amazing profit margins, and declining stock price, there is no question about why this is the second most bought stock. All in all, that is it for Microsoft, and let's have a look at number one on the list, which is Meta. Just look at the stock price and you will see why. The stock is down 50% year to date, and there are several reasons for this. First, Meta has seen a weakness in its core business, more specifically with less active users per day and also more use of Instagram Reels, which is less monetizable, which means less ad revenue for the company. Second, because of heavy focus and spending on the metaverse, which investors believe might not give a positive ROI. But why then are these super investors investing in Meta? Well, the reason is because they think that for the core business that it has today, the share price is not reflecting its true value, meaning that it is oversold and thus cheap. I mean, if you just look at the numbers Facebook has had, with 40.34% annualized growth in revenue for the last 10 years and 44% for earnings, and while the core business is the same and still generating amazing numbers, the stock price does not reflect that. If you just look at the 5-year average PE for Meta, it is trading at a 50% discount. And with that being said, that is it for the top 5 stocks super investors have bought in 2022. But hold on, since you watched to the end of this video, I have a little surprise for you. This is how you yourself can check which stocks super investors like Warren Buffett and Bill Gates buy and hold in their portfolio. Go to dataroma.com, click on super investors, and then you can see what each individual investor holds in his portfolio and their most recent buys. For example, Warren Buffett holds stocks like Apple, Coca-Cola, and Activision Blizzard. And if you click on activity, you can see all the buys and sells Warren Buffett has made. Pretty cool, right? If you enjoyed this video and want to see more, then please like and subscribe, because this video took a lot of effort to make. Thanks for watching and see you next time on at Sabad Invest.